Okay, I'm going to be checking Twitter for an audio check. If you would assist me in that confirmation, I would greatly appreciate it. Thank you for that. Okay, we're going to be brief because obviously it is a holiday today, but I did promise I'd get you this information. So we're going to do this expediently, and then we will break to finish the observance of Resurrection Day. So, in the template example I was given yesterday in the session, the template was built by two indicators for MT4. Now, the indicators really are just drawing lines and boxes. That's all it is. It's not really doing anything spectacular or magical for you. But there's a place on Forex Factory. Make sure I've got my audio still here. Okay, this is forexfactory.com. And if you go on their little search window up here, in the upper right hand corner, and do a search on daily boxes and lines indicator. Okay, this is where I acquired it from. Really useful tool. It allows you to do a lot of things that we won't go into here, but we'll obviously be able to show you what you can do with it. Once you download the indicator, this is some of the things you can do with it. And I didn't show you everything that I do with it last night, but we will add a little bit of that today. It gives you a whole lot of detail. Hanover is really talented as it relates to coding MT4 stuff. So you can see that, and here's the indicator down here. You're just going to save that to your MT4 platform, and then restart the platform, and then it'll appear in your indicators tab under customs. So going back over to the MT4, assuming you've downloaded the indicator to your platform and you restarted it, when you go up to insert, go down to indicators and then go to custom, and you'll see it appear right here, daily lines boxes. Okay, this is one of the cool indicators that you can have multiple applications in the same chart, but you're going to have to do something with it by having a unique ID down here. So you have to change this to something different. Okay, I'll leave that up to your imagination as to what you want to use it. All right, so what we're going to do is we're going to start at the top, and I like to have 90 days, about 3 months worth of information, and we're going to start this. Okay, we're going to delineate the time of day with daylight savings time in mind. Normally it would be 5 and 21. Now it's 4 and 20. Okay, and the box that you want to have shaded, I have a very light color, like Gainsborough is nice, at least on my eyes. You can create whatever background color you want to have to delineate the session for the entire day on True Day format. And the lines, you can create your own. We'll leave it like that. Now these properties down here at default will give you this. Okay, what it's doing is it gives you the high and the low established during that range of time, okay, or true day format. You can go back in the indicators list, highlight it, and then edit. Just want to do one more double check on audio. It's showing that I am streaming audio. If you guys could just give me one more opportunity to confirm that it is going through. I'd hate to have this give me the same problem we had the other day. I'm checking Twitter for confirmation on audio. Thank you very much. All right, so when we have the indicator plotted like we have here, we can go into this properties tab here and add other things like V as in Victor. If you do it one time, it'll give you a vertical line separating the beginning of the session for GMT. And if we show two letter V's, or VV as in Victor, it'll give you a ending vertical line that goes across the chart too. If you add an O in here, it'll give you the opening price. It'll draw a horizontal line through the entire range at the candle that starts it. So in other words, for GMT or midnight in New York. So that's what we didn't have yesterday, but we're going to add it here. And just add a letter O there. And we'll drop that in. Once you close this, it'll appear right here. Okay, so it'll give you your opening price for those that want to use it for that. If you want to use it for your day trading entries or filtering your Power 3 format. You can also have this set up for create a separate template for GMT where you can create the 0 GMT start time. In other words, instead of 4 GMT we have as the beginning time frame of this true day format, you can do GMT format, which would be at the beginning of the day, 0 GMT. And then if you create the opening price there, you can also look at that, how we compare midnight in New York, the opening price there, and 0 GMT. So that way it gives you a reference point to do both. Okay, and the only thing you would have to do is create a separate template using those basis points in terms of time, 0 GMT as your starting reference point. But for now, once we have this here, okay, we can go in and now add another version of this. Okay, and right away you got to go down and create some other name. Okay, I'll just put some gibberish in there. It doesn't make a difference as long as it's distinct from the other one. That way it'll allow us to plot it on the chart as well as an overlay. Now here's what you're going to be looking for when you're delineating that sweet spot on the daily range. Yesterday in the video I was presenting to you, I was talking about the time that you're looking at is midnight to 12:30. In other words, 30 minutes after midnight in that time range. Okay, I had an old setting on the chart at the time, so that was a mistake and an oversight on my part. So if I added some confusion to your study, I apologize for that. But what you do is you go into 4.0. It's midnight in New York. You're going to do the same thing here but now 4 point. Delete this. 4.5, and we're going to use 20, and we're going to use the box. We're going to change that to red just to make it pop so it stands out. You're paying attention to it more that way. If you don't like these color choices, clearly you can use whatever you like. Okay, and what this has done is it delineates the section of the day where you have the highest probability for Power 3 conditions. Now, The other indicator that I added in here, now you don't need this one, but I got it from one of the subscribers in our group, Kate. She was very nice enough to send something, but I was already using this here. But I'm going to show you what I had on the chart because it was a lot easier just to pop on there. It is this one here. She sent this to me by way of email, and all I did was change the times in here to show the the float of the previous day, so that way you can see all this little consolidation here. I plotted that as a rectangle, just like we see here. You don't need to use this one here, but I'm still playing around with this one, seeing if there's any advantages over this one that we have on the chart now. But that's what you see on the other chart. Now, if you don't want to use something different, you just want to use one more overlay, you can go back in and add one more of this the same template in here, and it'll give you an option to add one more thing in here. So we don't have any box segments in here shaded like we do in here, because the shading is actually being done in this little 30-minute window. Now the question is why 30 minutes? Why why am I talking specifically about that 30-minute time frame? Why 12 midnight to 12:30 in the morning New York time? What's so significant about that? Because I believe that the financial day begins at midnight in New York time, at least as it relates to the majors. I trade predominantly major currency pairs. I do very little exotics. I don't like to do you know, crosses of like euro, yen, or anything like that. It's usually a dollar cross that I'm trading. And I'll be honest with you and tell you the reason why I trade that. Number one, they're more reliable. I think they're more transparent. They're very manipulated just like the other ones, okay? But the manipulation is a lot more predictable, and you can anticipate the things that you would expect to see in terms of manipulation when you watch the majors. And because I trade in the US, I have traders status for taxation purposes, and for 60/40 treatment on my taxes, you have to be trading the majors to get that that advantage. So it's not my point to talk about taxes and such in here, but that's the reason why I trade the majors, and I don't try to monkey around with the other crosses. So there's the reason why I trade what I trade. But because our belief is, or at least my belief that I try to share with everyone, is that when we're looking at the marketplace and we have, actually, let's go in here. When you see this here, I forgot to tell you about that. If you go into the indicators and you want to take out here, take all this out, it'll remove that second set of text, and it cleans all that up, so that it'll give you the range of the true range format. Okay, so what we've identified is the opening price on the midnight with that blue line going across. Okay, and we also have our filters for being short or being a buyer on those particular days. If we have these things on our chart, okay, if we don't look at the time window between these two boxes, it can be very, I guess, really the word's escaping me, but I think it's not obvious unless you draw your attention to the areas between these two times of the day. No one really pays attention to this section of time. Okay, and if you look at everyone that teaches trading, or anyone that has mentorship or trading instructions, if you will, they never talk about that time of day. It's just goes unnoticed. No one really refers to it, and that's a telltale sign that they aren't aware of this. Okay, and I've said this from the beginning. Some of the things I do are going to be completely against what everyone else is doing, and that's great because that's where you want to be at. the opportunity is where the least eyes are being placed on it. If you're going to be in an opportunity, you want to be the first one in it. This is that one approach to seeing things in a different light, and it gives you the confidence really to know exactly what you're going to be expecting to see. And if it doesn't unfold like you anticipate, it gives you a comfort level to move to the sidelines and wait for more clear picture of what you expect to see in terms of price action. But because we had an expectancy for price to move a certain way, on the 16th, we saw the dollar back here. On this particular day here is the 16th and 17th, trading down into that daily bullish order block like we discussed in the last session. Just make it there you go. So here's this the 16th and 17th, okay, when it traded down in here. Now again, not to beat a dead horse here, but I was talking about the likelihood of it trading up first and then coming down. And if it hit this order block here, we would change gears and look for buying in dollar, which would be bearish for foreign currencies, euro and British pound. We focused on the British pound primarily because of the euro pound showing a willingness to go up, and I will try to include that in this presentation as why I believe it was going to go up. So I got a lot of questions as to what gave me that indication to expect that to unfold. Pardon me. So going back over to our cable chart, what we have here is those areas shaded, and what I did was I created another template to show the distinctions in here. Now the chart looks rather busy, I know, but to illustrate some of the things that are salient to the discussion that we have as it relates to the flout and going into the marketplace looking for buying opportunities and selling opportunities, we go into the market looking for reasons based on the dollar. Okay, and here's the 16th in here. We have the dealer's flout in here consolidating, and market goes down, trades into that New York session or kill zone, and that's the classic time of market reversal profiles. I get a lot of questions by email, and some folks still are tweeting questions. One of the ones I saw on Twitter the other day, I think it was last night or this morning, questioning, I said before in other discussions that the higher low is formed in London. Yes, that's when you have a big range day or a directional day up or down. If it's going to be a bullish day, there's going to be a high probability that the London session is going to create the low. If it's going to be a bearish day, and you'll most likely see the London session post the high of the day. Market reversal profiles are typically seen by way of having the New York session post the reversal or change course and trend at the New York session, because usually the news embargo is lifted around 8:30 in the morning New York time. Usually employment numbers coming out, some measurable injection of volatility is introduced to the marketplace by way of news, and it's usually around that 8 o'clock hour in New York time. But if it doesn't have that news as a driver for it, the London close will actually sometimes post the market reversal profile. I did a teaching on that, and I know that there are a couple torrents on the internet. I don't share a lot of the old templates and teaching tutorials because it has heavily saturated advertisement for a forum I no longer wish to be a part of advertising. And those of you know me for a long time, you know what I'm talking about. But I'm not going to draw any more traffic to their website because they've made money off of me, and I'm just not going to support them. But bottom line is it's out there, and it's the market reversal profile video. If you ask on Twitter, I'm sure someone will see it, and I'll direct you to where you can get it or snag it off the internet. So, but it teaches you the understanding there as well. So it's not a new concept to us. Obviously, in our group, I've shared that since in 2010. I think I came out with that one, shared it. But anyway, the idea is you want to have a couple things on your chart, and the easiest way of doing it is having you can put the indicator that Kate shared. We can look at the settings for that here. This is the way I want to do it, Michael, not that one. Over here, you can see the settings I have are 20 to 4, and it'll give you the range for that particular time of day, which is the dealer's flout, and you'll be able to see the central bank dealer's range, which is half of that, and then you have the Asian range as well. So you can actually divide this and create an Asian range indicator out of it, and you can use the daily boxes and lines indicator that we have here to create your Asian range indicator and draw those lines across the entire range as well, like we have. Okay, so once you have the indicators that you want set on your chart, you just go and you right click on any section of your chart here, go down to templates, click save, and then save it as a reference that you would like to use. Now I use the ICT London Open True Day. That's what I use for this one here. So when I click on this ICT London Open True Day as a save, if I click that, it's going to be saved with daylight savings time. So you want to delineate that as well. I already have that one down here. You can see True Day with daylight savings time, and when it's on standard time, when it's not being observing daylight savings time, I use this one here. Okay, so once we have this understanding, okay, what it'll do is it'll give us a way of observing the marketplace in a very objective way. It's not going to be forcing anything in the marketplace. It's not going to give us a buy or sell. It gives us a frame of mind to work within. The flout is going to be established once we close the session out and we enter the midnight candle in New York. This is already in the marketplace. Okay, it's not going to do anything for us except for give us a frame of reference. Okay, and if we're bullish, the scenario is we want to see them come down below this. Okay, and if they come down below it, we know it's a high odds likelihood if it does it during a specific time of day. Okay, now I'm painting or drawing these little rectangles in for the London Open Kill Zone. There is a MT4 indicator that allows you to plot the sessions below, and there's one that I like that has it on the bottom and the above. I'm trying to get the indicator off the guy I saw posting it on YouTube. I'm not sure if he'll be willing to share it with me or not, but if I can get it, I'll make that available as well. But it's not a big deal to draw these on here. I know everybody wants it real quick and real fast and fancy, but a little bit of drawing isn't that big of a deal. I mean, if you have to have everything done for you, it's too much laziness in my opinion. But if you're bullish, you want to see it trade down below the flout, and once it collects the liquidity below that range, that will give us a filter based on time. We want to be doing a buy in the London open session. This is daylight savings time adjusted, and when price comes down, it clears a level of stops, seeks the liquidity. You need to be buying in between. Okay, what you're doing is this. Let's just do it like this, Michael. Anywhere. Now it's going to sound fast and loose, but this is really what you're looking for in terms of ease of trading. Okay, anything below this range here. Okay, usually, like I said, we look for a 10 pip sweep below. Okay, and if we look at that in terms of what that would look like for range, okay, it's got to go this much below, okay, for 10 pips, and for 20 pips here, Okay, we didn't go 20 pips, but we did go a little bit above 10. So in that range, that's a standard sweep on stops in a time of London open kill zone. Okay, this whole entire shaded area in here is the time of day you would be buying. This is the area at which you would be buying based on price. So we have time and price, and it has to be below the upper level on this extension on the first 30 minutes of trading. Now, the reason why I want you focusing on the first 30 minutes after midnight is because, again, we understand that that midnight, that's the beginning of the new day. And that specific time of day is so paramount in my trading. If there's going to be buying or selling based around that time of day, you want to have a very small window narrowed down to where that buying and selling is going to originate. We understand that this is the candle here that starts at 4 GMT, and the very next candle is this one here. And this, it's painting to this candle, but it's only really showing these two. But the way the indicator paints, it looks like it has to cover this one, so it has to get to this next candle to look like it's doing its job. What it's actually showing is the high and the low of this particular candle. Okay, now sometimes you may have to do a little bit of homework and look in here a little closer because there may be a deviation in here because the indicator doesn't plot on the second candle. It only plots the high and the low on the first candle. Okay, unless someone can come out with a way of improving on this indicator here. This is what I use to teach it to my kids. I don't need these reference points. Okay, when I look at the chart, I look at it as a virgin chart. I know what I'm aiming for. I know where the liquidity is going to be, and this is just a training tool. Now, if you continuously use this tool throughout your trading career and to see where these things are, there's nothing wrong with that. If that's what you need, don't look at it as a crutch that would make you feel like you're insignificant, okay, or not as astute as a trader because you're using it continuously, even if you've been trading for a long time. If it helps you, it's a tool, then use it. Okay, but for now, it's just a training tool to teach you the concept of the daily range and the engineering of the daily range and how to build a directional premise on how to use the tools, where the signals are going to form, what it looks like, why it works, and when to avoid it. And if you really think about it, that's a complete system. Okay, it leaves the discretion to you as the trader. Do you want to take the trade? Because if it doesn't, in other words, if we're bullish on cable, British pound USD, based on a bearish dollar, the ideal scenario is to see them come below the dealer's flout. If they take that out going down initially, it's such a loaded deal. It's unbelievable in terms of odds. It being a strong buy. Now there's going to be times where it will go down, okay, in London, and it might start to move up for you, and then it'll trade back down into New York and stop you out if you trail up your stop or if your stop's just not wide enough. If it does that, I'll still take a buy, okay, because we know that sometimes the London open low or high can be taken out in New York, and if that happens and the conditions are still there for favorable outcomes for the dollar being lower and cable higher, I'll just simply go in and take a New York session buy. Okay, in the same scenario, because we have the range delineated here. Okay, if we have, let's take that opening line off because it's a little too much for right now, in my opinion. Let's take that out. So removing the O, we do that, and that blue line will disappear. So now we have a little bit more cleaner level. Now, when we have these types of things set up like this, okay, it gives us the beginning basis point to, and this gives us an area where to reach for below the stops, for the stops rather, okay. So we went and aligned it up about right here for 20 pips below the dealer's flout. So it didn't quite get down there. It was a little short of it, but yes, it's close enough for a very sound entry. We use this, okay, to teach you the foundations of the daily range engineering, okay, introduce the dealer's flout, okay, and then we'll start looking at this to build ideas on how we can project the daily high and the daily low that the algos will generally run for. And when they fill the numbers on the daily range, that's the next level we get to. But before we get to that, we have to go through the intraday templates on what scenarios typically unfold and what are the guidelines that lead you to go to one template over another based on some of the conditions that are available to you in your study of price action. Because there's a method I go through. It's ingrained in my mind. I've been doing it for so many years. I don't go through a checklist anymore. I just know what it is that I look for. But obviously, because you don't know it, you're going to have to go through a process of going through checks and balances. Okay, this is what's happening, so therefore this is a probable template for the day. And if this is happening, this negates this type of template, so it allows you to focus on one or two probable scenarios based on a bullish or bearish bias for the day. And like I've done in other videos, I've shown a plethora of reasons on how you can build a directional premise. But again, so many of you are so hardliners about knowing you need to know the direction every single day. And I've said this openly, okay? I can't tell you every single day with absolution, with 100% guaranteed results, what the daily direction is going to be. I can't do that, but I can do it about 85% of the time. Now, do you need a whole lot of trades if you have that understanding? Hell no, you don't need a whole lot of trades, okay? You just need really good ones. And I already told you the time of the week when they form, Tuesday and Wednesday, okay? Tuesday and Wednesday, if it's bullish on the week, you expect something bullish on the week. Tuesday and Wednesdays are generally going to be a buy day. They're going to be good days to buy. If it's going to be a bearish week, if you think there's going to be some selling pressure coming in a particular market, Tuesday and Wednesday are going to be good sell days. Okay, one of them may outperform the other, but does it make a difference? You still have opportunity. Narrowed down, you know what you're going to do, you know what you're looking for, and now you have one more reason to anticipate the manipulation. We talked about accumulation, we talked about distribution. Now you've learned what the manipulation part is. When does it come into the marketplace? When does it happen? There's a guy on the internet, on YouTube, that talks about supposed market maker stuff, and he talks about boxes. Okay, what's inside the box, and if you understand what the box is, and yada yada yada. Again, a lot of my principles watered down but never delivers it. Okay, this is the only time I've ever shared this information. No one else out there does this. Steve Morrow ain't doing it. Okay, Martin Cole ain't doing it. Okay, anybody else out there that says they're market maker this and market maker that, they didn't learn what I know. Okay, what I learned it from, these are real market makers. These are not myths and fables made up about meeting people on a coffee stand or having lunch and some Joe Schmo sees them and all of a sudden they want to teach them the keys to the kingdom. Okay, that doesn't work like that. Okay, I showed myself on the internet in a capacity where I had a hot hand at the time, and because of that, I had a large following. People flocked to me because everything I was touching, I was like Midas. If I said a market was going to go up, or if I said a stock was going to go up, it was happening. So I had a very big following, and I had folks reach out to me, and it was just a matter of good fortune that I came in contact with two gentlemen that introduced me to an opportunity that once I learned a little bit more of it, obviously it scared me out of the constraints that it would put me under. But once you learn something, how do you forget it? You know what I mean? So the ideas that I'm sharing here are very, very close to what I learned. But I can't give you exactly, because then I would be in violation of non-disclosure. Okay, so like I said, I've hinted at before when we did the Market Maker series, that I can give you a lot of information and get you really close to it if you study these types of things that I'm sharing over the next couple weeks. You will get it, and I'm saying that and I'm leaving it there. But trust me, it's going to take a little bit of study, and it ain't going to happen in 1 month. You're not going to see it just a couple of times. All of a sudden, you're going to have it click like that. But over a period of time, about 6 months worth of studying, you'll see it. And don't ask me in an email, because I'm not going to confirm or deny any of it. Okay, but you'll know. You won't need to ask me. You'll see it. But what I've shared here so far, okay, you really wouldn't need anything more. but I know you're just like me. You need to have everything. Okay. So, obsessive compulsive disorder really isn't a weakness. It's actually it's an asset. So if you don't have OCD, develop it. It's a good thing. So when we have things like this, okay, outlined, and we have a frame of reference based on a dollar premise, okay. So this is why it's important you start your analysis with the dollar. If the dollar is going to go up, that gives you all kinds of understanding across the whole marketplace. Okay, if the dollar is going to go down, if it's going to go up, all those markets around the world are closely following what the dollar's doing. Commodities are certainly doing that. Okay, we've had a paper trade exercise under cocoa, and it's been still it's something that still could pan out. Obviously, um, when we close in the last 5 minutes of this presentation, I'll talk about what may happen coming into this week here. We'll hint more about cocoa, but largely the dollar is, you know, you need to know what it's doing, okay? Because it's going to cause the other markets around the world to do certain things based on the reactions or actions in the dollar. So I begin all my analysis with the dollar because of that primary uh, uh, fact, and you can't shake it. You know what the dollar is going to do is going to set the tone for all the other markets. Okay, and once you have that established, you have to look at the dark horse, if you will, and that being the euro pound. And the euro pound is the one that can upset the apple cart for my trading when I trade the euro USD and the British pound USD. If I'm bullish or bearish on the dollar, this still can throw you out of whack. Okay, because um, the euro and cable are uh, closely correlated pairs, but this pair will upset that correlation sometimes. And you have to look at this pair as a separate animal altogether. And if you're bullish or bearish on the dollar, this can still go against what you may see in the dollar on the short term, but nonetheless, it's just enough to throw it out of whack. And then you have people that learn my stuff come out and teach Steve Morrow and says that correlation is full of crap and it doesn't work. It does work. You just need to know how it works. Then you'll obviously have a better understanding. So watch some videos, Steve. So looking at what we have here, we have the euro pound, okay, and obviously the trend's been up since last fall, and clearly you can see that here. But we have had a really nice equal low cleaned out, or double bottom for those guys that like to refer to it as that. I call it Candyland, where you see equal lows like this, okay? And if we have a trend that's clearly noted and it's discernible like we have here, it's clearly up, and we have price create a very nice level like this, okay? And price starts to rally up. Boom, it takes that level out, cleans this level out. If they ever come down to clear a level of stops, that is the biggest money-making neon sign you could ever see in charts, because it's a loaded deal. They came down to take the liquidity out. If they can get sell stops in here, why are these sell stops in here? Because everyone's net long on this pair. If they are, they're going to trail their stop loss. This is a good support level. They're going to think retail, weak-minded bulls, soft bulls are going to have their stop loss right below that. So the market will come down, mark the market at 76.75. Once that level's printed, all those sell stops become what? Market orders to sell. Why would they want to do that? Because it introduces and forces liquidity in the marketplace to be sellers, to them that want to acquire the other side of the marketplace. And then you see a reaction like this. When you see this, that's a beautiful illustration of accumulation. That sets the tone for this high to be taken out. Because if they're going to come down here and clear these stops, they're taking this high out up here. Bullish, euro, pound. It's that simple. Okay. Where's it going to raid? This high. That's where the liquidity is. Above the high. Above the high. Bingo. Okay. So again, you're asking questions. You know, how did I know the euro pound's going to go up? It's the same stuff. It's not voodoo. It looks like voodoo, but it's the same thing. All we're doing is looking for liquidity. Where's the market on the higher time frame, where the banks are most likely doing their most work? Okay, where are they going to draw a price? Okay, the algos at the bank level are going to pull price up to here because this is where the liquidity is. There's going to be folks up here that want to be capturing the high. There's going to be funds up here trying to get short. You know, they see the cable has traded lower. Fiber's been in a narrow consolidated range that we talked about before it actually went into it. It's been in a long trading range, a lot longer than I wanted it to be actually, but you know, there's a lot of people that want to trade the top end of that range in the euro and try to see it break lower. Ultimately, I do see it going lower. I mean, I think that's where we're going to see. We're going to see parity, I believe, eventually over time. But for right now, they have kept euro dollar in a consolidation. Now, when we see this indication that we had stops taken out on euro pound and liquidity above the highs here, okay, when we see that, that's going to do what? We said this in the last session. In your notepad, if euro pound is going to go up, the two scenarios are this: euro is going to rally and cables being held in consolidation, or euro is going to be held in consolidation and cable is going to drop. That's the only two scenarios that causes this pair to go up. Can't have it any other way. Okay, so that's why you need to have an understanding of these dark horse type currency pairs. That if you have closely correlated pairs, you got to go into them and study them, because they will be the one that upset what you believe is going to happen. Even if the dollar is going to be bullish or bearish, it can still cause some things to occur in your trading. So that's the proper use of correlation and using the dollar index for daily premise. Let's go back to our original chart here. Now, once we have our chart set up and we have everything we want on it, I have the homework assignment for you is I want you to start experimenting, okay, with the range that the dealer's flout has, okay, and I want you to use that range over the course of each daily range. Okay, you can pick any time you want. You can go and apply as many overlays of this information with these indicators as far back as you want, but go over a particular segment of time and do a back testing. Okay, and do some studies with overlaying the range of the dealer's flout on the overall daily range. Okay, see how many of these daily ranges, I'm sorry, this range of the flout can fit inside of a daily range. How much of this particular range did the market trade down from the open at 4 or midnight? Okay, how much does it move above, starting that range from the high end and from the low end, and do it on the downside too? Okay, and I want you to study that, because it's going to lead us into the last stage where we actually get into projecting the algo high and low on the day, which is not what this is. Okay, this is just plotting what's happened the day before. We're going to be looking at what's happened not yet. Okay, in other words, it hasn't posted the high or low. Okay, so we're going to be acting like a really high-end average daily range indicator, but it's going to be highly, highly accurate, well beyond the 5-day average daily range levels that you see me using in my charts. Okay, so we're going to go over to the euro, I'm sorry, the dollar, for just some discussions for going forward in this week. Like we talked about yesterday on the presentation, we are trading just right about the mean threshold of this bullish candle. I'm not so concerned about this one here. I do believe that we could see a rollover down in price. Now, if we see it run up into this area here, my suspicions are going to be that we've taken out the stops here, traded down to a higher level bullish order block, and we are now setting the stage for a return back up to that dollar mark on the greenback and retest of this high. If we start to roll over, we may come down in here and challenge this low here, which would be rather bullish for fiber, and I would be looking for fiber to break on the upside. If we see the dollar trade up into this area here and clear out this high, I do suspect that you know, if this high is taken out, I would not want to see price trade back below this down candle. So in other words, the scenario is if the dollar trades back up above this high, it should not be allowed to come back down and trade below the high or the opening on this candle right here. Okay. The reason why, because I would be viewing that as a reclaimed bullish order block. So I would expect to see, cutting through candles, Sam, expecting to see some measurable recapitalization of that level here. Because we did come back all the way down here and cleared all this range here, we are in fair value. We did see a nice response here. It's just, I don't know right now. Okay, it could change obviously after Monday and Tuesday's trading, but what we do on Monday and Tuesday said obviously will give me a greater understanding of what the prognostication would be for the dollar. And like we've been harping, the dollar is the benchmark for my trade ideas. Just want to double check the audio. It should be good. All right, so we had basically an up week the entire week. Every day was up on the dollar, and every day was down on cable. We had fiber. Let's go in here and look at fiber. We talked about this level here being swept and the likelihood of it not staying there long and trading lower. It did that, but it's still in a really sloppy consolidation. Let's go out to a daily time frame and go out to a Virgin chart. All right, so here's something that I'm watching, and if you look at what we have this really huge bullish order block that price is just hanging around inside the top of right here. Okay, and I didn't like the fact that where we stopped at, I didn't like that. Yes, it cleared the bodies of the candles in here, not the wicks, but it cleared the bodies. So that's enough to do what we see here. That's fine. But overall, okay, if you're just going to look at the euro, I like the fact if you're a bull and you're a buyer, I like the fact that we're seeing the market find some support in here. There hasn't been a real willingness to see it dive deep into this. Okay, so with that said, okay, if you go through the candles, okay, there's another a reference point in terms of institutional order flow. We have here as a breaker. Okay, there was some buying in here. Yes, the market went down lower, came back up, boom, bought it some more. Same general reference point in here. There's going to be deviations because of every feed having a difference of highs and lows. You're going to have that across all different platforms, but the general area here is really close to it, and we're back in it again. Okay, we didn't take out the high. This is a rather sloppy high in my opinion. So gun to my head, I would like to see some reason for this thing to push higher. If it does and then gives it up, then we will go back down here and trade into this particular candle, I believe. We do have relatively equal lows in here that I do suspect that over some period of time, eventually they're going to come down here and clear them. But nonetheless, where we're at, I'm watching this level here, that 111.60, 111 mid-figure in that area or that vicinity. If we give up the ground here, then obviously we have to start looking at levels, at this order block here, and then clearing out these lows here for the bears. But the bulls, I believe that 111.50 to 111.60, pay attention to those levels going ahead into this week. If we see some buying in here, we would be looking for a breach of the old high here at 113.78. We're basically looking for that 114 level to be reached for. So I do suspect if we're going to take that high out, we're going to be under the 114s. And US CAD. Alright, so we talked about this one here in our last discussion. Oh, not the last discussion, but we had a live session. And I was talking about the difference of this wick in here. Price came up, cleared the bodies of the candle, and then traded softer. Okay, came down into a bullish order block here. I do see a little bit further upside on US CAD. Here, traded down into that order block here. Then this order block was recapitalized there. You see it here, buying, and market trades up, and then market trades right back down into this order block right here. Really nice reaction. We talked about this. I tweeted this one in here, and price shot up. It's just fallen short of the price objective I had on the daily and 4 hour. Let's go to an hourly chart, and I have this level. Actually, let's do this. I can already hear you. Why are you drawing it there, Michael? Why are you putting it on that line, Michael? Why are you doing that? This candle here, okay, is, to me, even though it is a bolder candle, I like this one here because it has a whole lot more action in terms of the bodies, the wicks and such all around here, and it is a very nice, big, beefy. It's bigger than this one in here in terms of the body of the bullish candle, and there's a lot of wicks in here. So I want to kind of go back to the most clean level in terms of where I think institutional order flow is, and it's the 133.52 level. So that obviously we would like to see that 133.50 level on the upside. And isn't that nice how they left these clean highs? Okay, so we have liquidity above here, okay, and an order block just above it. Okay, so price is crouched just below that. We have liquidity to drive it right into a ICT bearish order block. Now, I'm not saying that it's going to hit this level and it's a short. I'm not saying that. I'm saying that's a target for price to be drawn to from where we're at right now. Okay. The questions are always, where's price at? Where is it coming from? And where is it most likely being drawn to? Okay, those are your internal dialogue. Every single time you look at the marketplace, do that. Where are we at right now? Where did it come from? And where can it reach for? Wherever price is most likely reaching for liquidity, fair value, okay, that is what you should be focusing on, because that'll give you, especially on higher time frame charts, it'll give you what you're looking for and you're asking me all the time for. Show me the direction. Teach me how to get the direction. You get it by doing these exercises and spending time in the charts. Okay, and once you get that experience, you don't ever forget it. But it can't be taught by me telling you one simple thing. You have to practice. That means you have to be in charts. You have to see it experientially. You have to see these things unfolding. Otherwise, it's not going to leave an impression on you. So therefore, when you start to seeing it unfold live in your own charts, you won't need me to help you. You'll know it. And once you know, it's like riding a bike. You can't forget it. Okay, so it's one of those things. Once you see it, you can't unsee it. But I do like the fact that we have equal highs in here. So there's a lot of mixed signals currently right now. The market could go either way, and it's one of those areas where you got to keep risk very light and keep your trades very select. But I like where we're at in terms of the US CAD. I believe that we're going to be using these stops in here to generate a move into here, and whether or not we have enough to push through here, we'll have to be, we'll have to see that later on. But right in here we have an unfilled range still. It came up, a large portion of it was filled here, but we have a little bit more. I think it could still pop up in there this week. Let's look at the Aussie. And let's go out to a Virgin chart. And let's go to a daily. Alright, so we have I do see I like this order block down here. There's a little bit of a range in here. We did come all the way up in here, hit this order block that we talked about in previous live sessions. So I'll counsel you to go onto YouTube and look at some of them. But this level in here we talked about as upside objective. Right there. 76.70, and high came in at 76.83. Really nice reaction there. Looking at what we have, if we see the dollar rally a little bit more, that would send us down into this point here. It would clear out the stops here. Once we clear these stops, it would have to reject that rather quickly to resume overall market structure. But if we lose this low here, we would look for the market to move back down into this bullish order block. So we would see the draw lower on price, taking us down to that one. Always add a one to these things. To 72.50 to 72.20 in that area on the downside if we give up this low. If we see a continuation on the upside and the dollar rolls over bearishly, we are inside a bullish order block right now, but we would have to see an immediate response coming into the beginning of the week to see some accumulation here. We have a nice little potential indication that there was some buying in here, but I don't like the fact that we came right off of that with another down close. Even though we had a holiday week, I don't like that. It doesn't look as strong as I would really like to see it. But if we start to turn the corner here, we would be obviously looking to trade through this old high and then going a little bit further to the left side of our chart. We have this range up in here that could be used for upside objectives. Right here, looking at 79.87. I think if it trades there, it will try to hit that 80 as a upside objective. So there's the scenarios that you had to study for this week for the Aussie and cable. Let's go to a Virgin chart. This one here, I believe we're probably going to see it roll through these lows. We have liquidity on here on these equal lows. Okay, if we do that, we're going back down into this bullish order block, and if it does that, I will be buying cable, looking for short-term opportunities to swing trade. If we go down below the midpoint of the body of the candle, we will be going through this low. Okay, so looking at that 139.70, 139.80 downside, or 140 big figure. If we clean out these lows in here, that might be a good area to look for buys. Again, we're not just buying those levels. We got to look at other things to build the premise and solidify the idea behind it, not just going in there plunking down money, thinking that just because it's being mentioned in this video, therefore it's a buy. But bet the farm, that's not what we do here. But these are ideas that you go into the marketplace going forward and seeing what takes place. And weighing those factors out at the time when it hits these levels. If time of day supports it, then obviously there's probably a scenario that may be capitalized on. I like the fact that we just came down straight shot, just moved right from the open of the week and went right down. So I'd like to see it trade down through it, clear the liquidity out here, and then quickly reject, because then we're going back above this high. That's the scenario that would happen if we're going to see a further weakness on the dollar. Okay, if we're going to see a strength in the dollar continue, obviously we're going to go down into this order block right from the jump, and what we'll have to do is weigh out what the cable's doing once it gets into this order block here. So we have obviously the strong willingness to want to see price go below these two equal lows. There is liquidity below that, and what it does once it trades to that point will be indicative of what we're going to see probably for the next couple weeks. Okay, so that's about it for today. I'm going to close it here, and I'm going to wish you guys a very happy Resurrection Day. Um, Hopefully you've had some time to share with your family and be thankful for them and your health. So as the week unfolds, I will give you more insights, obviously, if I see something. And we will have another video release next weekend. It'll be a Sunday morning release, and we'll be releasing the 6 intraday market templates. And then after that, we have one more video, and it'll complete the market maker collection. And that's where we actually talk about the algo high and low. Okay, so with that, guys, I'm going to wish you a very profitable week, and be careful, and good luck and good trading.